Hello and welcome to the Real Men of Real Estate radio show here on KCAA Radio. This is your host, Patrick Franz, the Note Mentor. And you know that every time I do a show like this, my goal is to bring on some amazing guest speakers so that my audience can get a very well-rounded education when it comes to mortgage note investing. And, that's what my show is about. We're about creating passive cash flow from real estate without owning the real estate, right, folks? Get that. So, if you're one of those people out there that's been a landlord and you know the headaches that can bring, and if you're one of those folks that has been a part of stock market investing your whole life and you know that the ups and downs happen there, you maybe were one of the folks that got a little bit wiped out maybe 2008 because you were heavily invested or over leveraged in physical real estate property. So we know all these folks, and hopefully I'm hitting a tone with some of you listeners out there, because man, oh man, are you in store for a great show today. But before I go any further, let me just remind all you folks, my show is about opinions and stories from myself or my guests that are on this show. Don't misconstrue this as investment advice or investment solicitation or any type of legal advice. We always recommend that anybody who gets into any type of investments ever to make sure that you know what you're doing, and especially seek some real legal counsel and get the proper advice before you go investing in any money in anything. So this is just stories and things like that for entertainment. But boy, today's show is going to be so awesome, because I'll tell you who has a lot of great stories about investing. And that is going to be my guest on this show today. His name is Desi Arnaz. Yes, the Desi Arnaz, just like the actor. Desi Arnaz, very memorable name, very memorable gentleman. But boy, are you in store for some great information today on going from being a standard investor, or a singular investor, I guess you can say, and then transitioning and growing your investment business into becoming a fund manager, a manager of a real fund. Now, me growing up, well, I'll tell you, I was born in 1979. And I grew up in sort of the best age of Hollywood, I guess you can say, over the years. And I always thought that a fund manager was just some fancy dude in a pinstripe suit behind a cherry wood desk in a Hollywood movie. But it's not that way, folks. Anybody can become a fund manager. And that's what we're going to talk about today, that transition, what it looks like, and why maybe it might be the right move for some of you investors to perhaps start a fund, right? And we're going to go through that with my guest, Desi Arnaz, today, and I'll bring him in. Thank you so much, Desi, for being a part of the show here today, coming on to share your time and your wisdom with my audience. And like I said, these folks are in for a surprise. If they don't know Desi Arnaz, they're about to. And boy, let me tell you something. He has so much wisdom to pass along that I love having him on my shows. I love having him as a business partner. We're partners in a few aspects, including the Everly May Capital Group. And so I wanted to feature you, Desi, because you have quite an extensive story. And we can get into a little bit of your background when you come in and introduce yourself here, and just tell them, what all the stuff you've done in 40 years, which led you to note investing, which now has led you to become a fund manager. So the floor is yours, my good friend.
Hello, Patrick. Well, thank you so much for having me on today on your show. I'm excited to be able to speak to you and share my story, a little bit of my story with your listeners. And hopefully somebody will pick up some value there and maybe even some inspiration for their own lives. Because what we do, Patrick, is pretty darn unique, and it's pretty exciting, and it's very liberating. So I'm excited to talk about it. Thank you.
Yeah. And then, Des, so that people kind of just get an idea of who Desi Arnaz is a little bit, right? We want to tout you for all the latest accomplishments in your life, but you've had a life like everybody else, and you started being an entrepreneur or getting into some investing in these kinds of things way back when. I don't want to, toss your age out there to people, but boy, the guy has experience. He looks 40, but he ain't. He's got over 40 years of experience doing this stuff. So just give him a little background, who Desi is and how you arrived here today on this radio show.
Well, I'm not 40. Thank you for saying I look 40. I really appreciate that. I'm 70, Patrick, 70 years old. Just celebrated my 70th birthday on a cruise ship about 3 weeks ago. So I'm excited about that. Was a lot of fun, by the way. I'm excited by that. And back in 82, I got started investing in real estate, like a lot of people, maybe even some of your listeners, right? And my goal was at that time was very simply, I wanted to create some passive income, you know? I wasn't really looking to invest for equity growth or anything like that. I just wanted cash flow because even 40 plus years ago, I knew that cash flow was king, right? And I knew that if I could get enough passive income coming in from my rental properties, life would be good. And so that's what I was after. And so I started investing in real estate, and it was a good thing. I never loved it, but it was okay. It's what I knew, right? We do what we know. And I did that for 3 decades. And then I discovered notes. And that all happened on the 4th of July, 2013. I remember it because I was up that day. We were going to go to the beach. My wife and I were going to go to the beach here in Southern California. And I was up early, as I am on most days, surfing the internet. And I came across a guy who said he owned mortgages on 400 condos in Florida. Now, for me, that was like, whoa, really? Because this was just a guy. And he looked like he was in his 30s or so. It turns out he was. And I thought, how in the world did he get all those mortgages? And so I actually reached out to him, and we were able to develop kind of a relationship over time. And as it turns out, anybody can buy a mortgage. And that was news to me, Patrick, even though I had owned a Century 21 franchise, and I had owned 2 different mortgage companies by that point. I never knew that I could just go and buy a mortgage, buy someone's mortgage and have them sending their mortgage payments to me every month. And so since what I wanted from my investment portfolio was cash flow, when I saw it, I didn't have to think twice about it. When I heard this story, I thought, wow, you know how some people, they got to try to figure out, is this a good thing? Immediately, I knew, because I already had more than 30 years experience in this space as an investor. And I knew instantly, this is what I've been looking for, Patrick.
Yeah.
And so I jumped in with both feet and started learning this business and started investing to buy notes, investing a little bit of my own money, which I didn't have very much at the time. But I did put what I did have to work in the note space. And then I just started talking to some friends about it and bringing them in, and they started buying notes, and it just kind of grew from there. So today,
Des, when we're talking about this, right, this may be the very first time somebody's ever been a part of listening to my radio show. And some people may right now already saying, what are these guys talking about, owning somebody's mortgage, or what is this note investing thing?
Yeah.
Can you help break it down for people, just in case this is their first time? What are we talking about? Maybe something easy that people might understand, right, Des, which is,
okay,
you can own a rental property and put a renter in there and start collecting rent. Or you can own someone's mortgage and there's a homeowner living there paying you a mortgage payment. What's the difference? And since you have such vast experience now in both, what is attractive? Why would somebody say, well, maybe I had to take a look at this note investing stuff?
Yeah, excellent question, Patrick, because that's what I had to ask myself, right? Because I was going to transition from being a landlord to being a lender, so to speak, owning mortgages. And I had to ask myself, what's the benefits? Well, as I said earlier, I never liked being a landlord. I mean, I did it, but I never really liked it, because you got to deal with tenants. You got to deal with vacancies. You got to deal with the property. You got to deal with the neighbors. You got to deal with the neighborhood, everything. When you own the building, everything, it's all an issue for you. And at the end of the day, hopefully, after collecting rents and paying all the things that you got to pay, insurance and maintenance and repairs and whatever, and the mortgage payments, right? Hopefully you have a little money left for yourself. That's called positive cash flow. And so that's what I wanted. I didn't want all the other stuff, but in order to get the positive cash flow, I had to have all the other stuff like tenants and toilets and all that stuff, right? When I found mortgage notes, I realized I could actually get the cash flow without all the other headaches. Because if you think about it, Patrick, a piece of real estate that has a mortgage on it actually generates 2 cash flows. And it dawned on me after I got into the space. It generates 2 cash flows. One is called rent, The other is called interest. The landlord gets rent and the bank gets interest. Okay. The landlord collects the interest for the bank and then sends it to the bank. And from the landlord's rent, not only does he have to pay the bank the interest, but he also has to pay for maintenance. The landlord does. They have to pay for repairs. They have to cover vacancies. They have to buy insurance. They have to pay taxes. All of that comes out of the rent. But let me ask you this, Patrick. When you send the mortgage payment to the bank, what has to come out of that? Really nothing. You know, I heard crickets, right? Because nothing. and that's what I love. And I thought, okay, so if I'm collecting the mortgage payment and they send me $1,000, it's $1,000 in my pocket. If I'm collecting rent and they pay me $1,000, it's not $1,000 in your pocket, right? So that's the big difference. One gives you freedom and one gives you a job. When I was a landlord, I saw that as my job. You know, it's one of the things I did. So that's the big difference. But let me just make sure everybody understands what I mean by a note and a mortgage, because I use those terms interchangeably. When a person buys a piece of real estate in this country, they can pay cash if they have enough money, and they'll get a document called a deed, and that means they own the real estate. However, if they don't have enough money to pay cash, Patrick, they have to go and borrow that money. They normally go to a bank or a mortgage company and they borrow the money to buy the real estate. And then they still get the deed. However, they sign a document, 2 documents with the bank to say, basically, when I sell this house.
Oh, you know what, Des? Just before you get too far into this, right? We're going to take our first commercial break here just for a moment. And I know if you're listening, you're not going anywhere, because as soon as we come back from this break, we're going to get more with Desi Arnaz and why this note investing stuff is awesome compared to maybe physical real estate or being a landlord. And we'll have more when we come back in just a few minutes. See you in a minute.